See, the interesting thing about the refinement was that it came from missed trades. So when I was doing deep advanced self-review and I'd look over positions that I'd missed, even just positions that I'd done well on, I would look and see, right, could I refine this even further? That's where refinement kind of came from. And I started to notice that right there, all of the trades are backed by the higher time frame. They fulfill most of their potential 90% of the time. However, there's trades that I wasn't able to get involved in. And I started to realize, right, there is another criteria here that keeps our stop protected. In some situations, we actually are able to lower our stop loss, so then naturally risk to reward is higher, but it's in a safe way. So it's in line with the higher time frame, so you don't compromise your risk in that sense. You're not too zoomed in, but you still take advantage of the run. That was really the bigger thing about it for me. And I started to realize, right, it's not just refining trades I've already taken or the missed trades, it was some extra things layered into that. And that was where it really accelerated for me. So if this resonates with you generally, I encourage you to take a look at how we are looking at the markets, because with the way that we've structured the risk, low risk to high reward, that doesn't compromise your risk and factors in the higher time frame, it cannot be matched, and you'll see that for yourself. Do not confuse progression with movement. This is why most traders fail. They confuse movement with progression. It's almost like they're running on the spot. If you're running on the spot and you're doing the work, you might be huffing and puffing and you feel like you're doing something, but you're not moving forward. Running forward versus jogging on the spot is a completely different thing. Now, if you're a trader where you put in the hours, you're doing the work, what if you're just jogging on the spot? This is the reality. Do not confuse movement with progression. And I'm going to explain why in this episode. Yes, it is launch day, Friday the 1st of July. Welcome back to the channel. I'm going to share with you a very important episode and announcement that we have launched AFT. You might be wondering, what is AFT? Advanced Falcon Trader. AFT is something that's been in the works for a while. I've been testing this for 1.5 years and we are officially live. We went live midday today and people are already consuming and going through the content. Can't wait to see the returns. Now I'm going to share with you just a brief overview as to what that is, why I've done it, etc. on the charts. And you're going to understand how powerful this is going to be. I was very thorough with my testing, didn't just do this overnight. This had to be sustainable. And what we've seen already, because the thing is, those of you that know Falcon, we actually have live sessions as well. And in the live sessions, we've already been rolling this out to the guys for about 30 days now, something like that. And what we have seen, and respectfully, with the limited understanding that they have, because they've not had, a whole bunch of time to test this, they've already been able to implement it on trades, capitalize on those, on our fund and third-party funds, and scaled up. So no coincidence that we're seeing more and more people pass on their assessments, which is just awesome to see, seriously. So if they're doing that now, on very limited understanding, I can only imagine where they're going to be in the next 3 months. So for any of you that have a foundational layer of Falcon and you've traded our system before and for whatever reason it didn't work out or you didn't put your all into it, it really doesn't matter. You cannot afford to not know about this. Seriously, you cannot afford to take the risk to not understand how simple and effective in the right moments you can take advantage of these runs. It's launch day. This is more of a celebration. It takes a lot of hundreds and hundreds of hours have been poured into this to make sure it's right for the community so they can scale up. Because at the end of the day, what are you here for? You're here to make money. You're not here to chase the biggest return. Well, you shouldn't be anyway. You should be here to make money and do something that is sustainable and safe and doesn't give you anxiety, something that has longevity. That is what you should be focusing on, and that is what we are seeing. So where we are going and where we are heading cannot be matched. I can't wait to look back on this episode and see Friday, 1st of July, 2022, we launched it. Where are traders by the end of the year? Where are they in 2023? When you see people start scaling up more and more, you'll see for yourself. So I'm absolutely buzzing. But here on the screen, just wanted to give you an overview on the daily chart here. So I've got pound yen and I've got CAD Swiss. Now, there are multiple pairs that you can see this on, but I chose CAD Swiss as well because it's kind of a messier, choppier pair. It can be a bit more wiki. Pound yen is a bit more straightforward. However, there's so much context behind this. Now, if you look at these risk rewards that you can see here, This is just to showcase the amount of entries that we're on. I think I've even missed a couple as well. It's insane once you know where you are in just one run, how much you can make. Now, it's not about the one-hit wonder trade. I think that's a garbage mindset to have. However, if you capitalize on a run is very different, right? Now, where do traders give a lot of profit back to the market? They cannot regulate their emotions, and what happens is once they make a big profit, just like in the casino, they just give it all back, and they cannot regulate their emotions to take a step back, let the market develop, and their impulsive nature to just want to be in all the time is what holds them back, which is why you see them, they get funded, they get unfunded, because they can't just take a step back and control their emotions. Now, if we just take a look at this particular chart here itself, so we have got multiple entries on the way down, and we've been able to refine that. But I just want to show you higher time frame as to why this complements what we're doing so much. So for those of you that know, I'll give you more of an insight, right? In Celebration, I'll give you more of an insight on what we do. So as you can see here, we've got a very, very simple structure. We have our overall continuation pattern. Now this is a larger continuation pattern in which we've had a huge impulsive wave. We then push to the upside. We create our middle section for just our bigger continuation pattern, if you like. So what is the path of least resistance? Well, naturally, we're looking for sales in this area, which we did, took some short-term profits, and at the same time, we also had another area to be aware of, which is this accumulation zone last time. So if we look at this on the daily chart, which makes more sense, you can see this was the last time that we had that continuation from selling off. We had this kind of expanding structure there, and price continued to the downside. So naturally, what happens is price can tap into that area. That's the only really significant part that we were really interested in. And you have to understand at one point is that you need to know the areas of value in which that you need to take a message from the market. Now, what's happened over the years is that traders tend to want to overcomplicate everything, and they can't do the simple things well. Because what really is an advanced trader? What really is an advanced trader? Let me know in the comments what you think an advanced trader is. I'll tell you what an advanced trader is. An advanced trader is someone who can do the simple things flawlessly. An advanced trader is not knowledge. If you think an advanced trader is someone who just has more knowledge, if knowledge was the most powerful thing, librarians would be the richest. You've heard it before. There's a lot of knowledgeable people out there. There's lots of traders that are knowledgeable, but all they become is just a knowledgeable trader and not a profitable trader. So they know more information about the market. They've got this thirst for knowledge, learn, which is, you know, an element of that is actually a good thing. But now they have all this knowledge, and now there's more margin for error because they have to factor in 58 different decisions and want to know, what does this mean? What does that mean? What does that mean? And they want to know why, and they can't even pull the trigger. So you've still not progressed then, basically. You have more knowledge, you're a more knowledgeable trader, and you're not a profitable trader. So what's the difference? What are you actually looking for? The goal as a trader should be to make money in a sustainable fashion, right? So therefore, knowledge is not actually as important as what you think. It's the application of the knowledge that you have. So what has happened? What's the cold hard truth of people that succeeded in what we do and the people that haven't? The cold hard truth is some people are just pure lazy and they want to blame. The other side is people knew what they were doing to a high degree. So they knew 80 to 90% of what they were doing. And that last 10%, funny enough, is the most important part. And we've seen this with journals, hundreds of journals of people that genuinely thought they knew their stuff, right? They knew 90%. And when you know 90% of something, your mind deludes you into thinking, well, you know, that's this, I'm following along. You're probably following along with my content and you go, yeah, I get that, I understand it. Yet you still can't execute on it. Why is that? It's because you know 90%. And you need to become unconsciously competent. You need to know what you're doing like the back of your hand. And if you only knew 90%, you fool yourself into thinking, well, I knew enough. No, you didn't. You did not know enough, and you didn't give it enough time. Because people with the same resources of you are scaling up their capital right now. Right now. Some of them had less resources than you, and they're still scaling up the capital. So you have to ask yourself, why? Why did you overcomplicate it? When the mind wants to see something of success, we tend to want to see this really complicated algo of like, yeah, well, it can't be that simple. Yes, it can be that simple once you know what you're doing in the right areas. And if you look at these journals, if I showed these journals to our successful students, they would literally look at them and say, these are absolute garbage. This trader didn't have a clue. And it's no disrespect. It's just you are either at the level or you're not. And if you're not, you can't be sitting there going, well, I put in the hours. Well, again, you're confusing movement with progression again. You're telling yourself because you moved and you was jogging on the spot, I done my ASR, I watched the content, therefore, I didn't become successful, it must not work. No, you were jogging on the spot and you didn't know how to apply it, which is fine, but why did you give up? That's the question you got to ask yourself. But I wanted to explain that and get that very clear. Advanced trading isn't a particular strategy per se. Advanced trading is doing the simple things really well, which is why this is AFT, because this is doing the most simple things to a high degree, therefore keeping risk the same and increasing returns, which is what we want as a trader. That's the holy grail. Right, so let's take a look. As I explained, tapped into that area. So naturally, we're looking for sales here. And if we go down into the time frames, we go to the 4-hour chart. Again, double tops. It's strange how these double tops, they still work, right? They've not gone away, funny enough, for 30 years. And they still work, same as double bottoms. They're still here. And if you look on the 4-hour chart, very, very simple. So we tapped into that area. And what was really important here, as you can see, so we've got this left shoulder, head, right shoulder. And it's just a little bit of a tip as well. As you can see, this head and shoulder, it didn't commit. Why didn't it commit? Well, the clue was in the left shoulder. So if I remove this now, look at the obvious gap that we see. The obvious gap here. So we get a near miss. So this near miss to that area, what you'll find is that when price gets towards this area, because head and shoulders tend to commit when the right shoulder is equal to or higher than the left. So the fact that it doesn't get there, I'm not surprised or shocked that this head and shoulder structure didn't commit, moved to the upside, formed continuation, and then broke above with that momentum. So that makes sense, because even if you just measure the pole from bottom to here, and you look at the top, we protrude above there. So we expect it to go higher than that left. And where's the next high? It happens to be there. So naturally, would we be looking for sales at the top? Yes. At a very simple double top, where people will be getting out of their buy positions and getting into these sells, which is exactly what happened. You saw this anyway. We actually showed this online before and afters, just to give you a bit of education. So how many entries were there? There was actually a 4-hour entry there, which we don't even need to go into. So you could have taken that as more of a swing style entry, if that's more of how you like to get involved in positions. If maybe you don't have as much time and your work is so high pressured that you can't even look at the charts very often. Well, yes, the great thing about the way that we trade is that you have that flexibility. However, so let's take a look. Let's remove all of these, right? Because these are just multiple risk to rewards. You're not going to get every single one of them. However, there were so many, and there's probably ones that I've missed. So why did I refine? Why did I refine the entry? I refined the entry because I was doing my ASR, deep ASR. Yes, I still do ASR after 14 plus years. Never forget what got you there in the first place. Tip number 1. Now, so what I started to notice is that these trades that I were taking that were really, really well, I could have refined them further and I could increase the return. I was like, great, couldn't refine that, so I started testing that. Then I looked at some losses. Could I have mitigated against anything? You can't avoid losses completely because they're just part of the game. And they're actually necessarily healthy because they stop you going into your Forex state. See, losses is a good thing, so it's another reason just to humble you when you can make all the right decisions for the trade, but it just doesn't work out, is a good indication to you that you are human and it is impossible to be 100% correct every time, nor do you need to. Now, the second thing was when I wasn't able to get an entry. So I would see a run happen and there were entries present, but I might have missed the first two just because of time zone or just a general mistrade because I wasn't by the screen or something in a meeting or whatever I was doing. But then there were other trades that were present there that I could have taken in a different way. And that is where the refinement started happening. So then I started to refine my trades, miss trades, etc. And then before you know it, you've got traders that, we've now already seen, traders that were doing the break-even dance that are now hitting 9-10% regularly. You've then got people that were finishing -2, -3, sometimes -5. They're now into profitability, taking the exact same trades but just refining them. That's without these extra advanced additional entries in the right moments. Then you've got traders that are already consistent, that are already hitting decent numbers, are hitting ridiculous. We had a 36% trade the other week on dollar CAD. Simple, such a simple trade, but executed correctly. And this is what people are not doing. They're not mastering the simple things. It's because our mind tricks us thinking, yeah, but what's next? What's next? What's next? You have to learn to be composed and learn what you do well. And if you don't know it well enough, well, keep learning. You should have this persistent nature to want to learn. Don't get sucked into this mindset that you're seeing online where people are just chasing numbers all day long. These people don't sustain it. That's why they get funded and get unfunded very quickly, which you see. And if you've been someone like that and you've gone through that, do you really want to be brainwashed into this rabbit hole of thinking, well, I'll just go again. And you're $3,000, $4,000 down on funded assessments to realize you haven't fundamentally fixed the thing in here first. Right, so let's look at entries. So we just go to the 15-minute chart here. Really, really simple. So my favorite entries were up here. So we're not going to go into the full detail because you just wouldn't even learn it even if I told you. You need to understand the context. So what's come out essentially in this AFT section, it's a completely whole new section. There's going to be recaps in there as well, and I've got lessons in there. So 3 lessons to start off with, which is essentially breaking all of these down so you know exactly what you need to use it on. Now, first and foremost, we're not going to be using it on reversals. We're using it solely on continuation for a particular reason that I cover. So step by step, exactly where to use it and where not to use it is already covered in the content. So if you're a Falcon student listening to this and you haven't seen the content yet, get over to the dashboard. You're going to absolutely love it. And we've got a competition for Q3 as well. So essentially this is the first entry right at the top, and we've been able to refine our stop placement in the right areas as well, which is awesome. So this particular one would have banked around 8%, right, depending on stop size. So you could have gone a little bit tighter, but even if you went at 15 here, it was fine. So it had anywhere a region between 6 to 10ish%, depending on stop size. Second one, I believe it was about 3 from memory, right, which was here. So this one a little bit less, 2.1, and then this one was a break even, right? Now the refinement is actually taken on a lower time frame than what we're on now, so we're on the 5 minutes. So this is about understanding how, where and why to use the 5 minute. So what you're going to find is that the way that we look at the markets, there's certain entries that they're not very clear on that time frame. So when we go to the 5, they are in the right moments, but it doesn't then mean that traders are going to be taking trades in a refined minute down here or using the 5 minute down here. It's about using it in the right areas. So high up in the structure and at the bottom of the structure for buys is the most appropriate area. So then we're able to capitalize on these ones. So for example, even just this one, how long did that one take? I think it was 7 hours from memory. Right, so from top 1, 2, 3, 4, 5, yeah, 6 hours. 6 hours, right? And you've been able to bank that. If you got all 3 of them, you would have had 2 wins and a break even. Now, in terms of actually getting involved in the trades, there were a few ways to get involved, which should just take FOMO out of everything, right? So you've got the 4-hour entry at the top, and then you've got entry number 2, entry number 3, you're taking on a break, entry number 4, entry number 5, right? So 5 entries already, and then you've got entry number 6 up here, entry number 7, entry number 8, entry number 9, and then those are the main ones, right? You could have taken it here, as you could argue 10, but I mean clean, like next level entries. So I'm not even going to go into these ones at the top, but just focus on this simple one here. So you can see here on the 1 hour, because all we've done is just filter and refine what we're already doing. That's the beauty of it. There's nothing complex to change. It's just knowing where to apply it drastically increases returns in a safe way. And that is all I cared about. It's all I wanted to do. So this has been crazy. And think about how beneficial that is for you as a trader, scaling up your account, right? So this one in particular, really, really simple. Now, when we talk about an advanced trader, because the trading industry is very confused and people are uneducated, essentially. People are measuring success and measuring their opinion in the wrong way. What they're doing is they're asking other miserable people for advice versus successful ones. So we've had people that are unsuccessful in our community, just like any community, right? You're always going to get a few bad eggs that just can't help themselves, but be in a victim mindset and blame, because who wants to take ownership of themselves? Who wants to look in the mirror and be like, oh, maybe I was the problem? Most people are not aware to that. However, what happens is they get into these little groups and these little toxic circles, and then they start being toxic together and they love it. They don't actually go and ask anyone successful. So they can be in a group where they're all not succeeding. It could be 4 of them, 5, 10, 15, whatever it may be. But they won't go and ask, right, so that person's doing really well. He or she is absolutely smashing out of the park. They're funded. They're scaling up with the same content as me, but I'm not producing those results. How about I use my common sense and go and ask them, what did you do? What are you doing different? Are you extracting the content in a certain way? Is it your trading plan that's maybe much more simple than mine and I'm overcomplicating it? They won't do that. They'll just have these little negative conversations together, just like victim mindsets. No wonder they don't win, and they take that same mentality elsewhere and just continue the same loop, right? So we're measuring it in the wrong way. We're not asking just simple good questions, right? If you know someone who's absolutely smashing it, you go and ask them. You don't go and ask other negative people that haven't succeeded to give you the same bullshit answers. And that is the reality of the industry that we're in. We don't even ask simple good questions. So someone who is not knowing the basics to a high degree, they would look at something like this and go, right, I kind of understand it, but I don't really know how to refine the entry. So what I'm going to do is I'm going to go about 40 pip stop. They're going to manage it fairly decently. And even on this one, they're going to walk away with, roughly about 5-ish%. You know, they might have got away with a little bit more, maybe a little bit less. So call it a 5% trade. Now, refining the entry, knowing what you're doing in the right moments, you'd be getting involved here. You would have cropped it through the wick, right, to 20. Could have gone a little bit less, but we're going to go just simple and 20 first. And then the difference, right, roughly around here. So double, right, pretty much double, there or thereabouts. Taking the same trades. Now, what's the difference? Imagine two traders, right? Two traders. They both take this position. Someone who is advanced will understand the mastery of doing the most simple thing, because you could just say, but you just put a tighter stop loss. No, I didn't. I put a tighter stop loss for a right reason in the right moment using the right time frame. There is a big difference. Now, two traders take the same one. Someone who's beginner or they think they're more intermediate and they know the strategy fairly well, they'll take that trade, take it with a 40 pip stop, bank 5%. Think that's good. They'll go and then take other trades, which could be break evens, could be losses. Let's say they take another 4 losses that month and then they banked 5-ish% and then lost 4. They finish on 1%. They're probably not going to be over the moon confident as, right, I'm absolutely smashing it. Yet, someone who is competent would have probably kept out of those trades, the other ones, the losses, and not avoid every loss. They still take losses. But then because they refined this in the right moment, they banked 10. And how long? We've got, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So, yeah, so under a day, right? Under 24 hours. And depending, they got out on that wick, maybe a little bit earlier on how aggressive they managed it. So in under 24 hours, call it that, right? We go on the larger sense. They was able to bank the 10%. They're both the same trades, yet they've refined it differently. Now, what do you think the difference in terms of how someone would measure that month as a whole, as to I finished on 1 or finished on 6? First, person who finished on 1 probably thinks a bit of average month. Person who finished on 6 would just see it as it was okay, but could have been better. But you're confident, and that 6% on 100k minimum still would have done enough for you to pay for your mortgage, your rent, your lifestyle, your bills. Maybe 1% didn't. And that's the difference. It's not doing these crazy complicated things. That's just one simple example. Seriously, one example. I'm not even going to go into dollar CAD and all these other things. The whole point of this episode is this is just a celebration milestone episode. But I thought, you know what, I'll give a bit of value, some lessons here. Maybe this can help you out. And more so, the lesson on what an advanced trader is. Because if you've got a skewed mind, you cannot afford to take the risk to just waste years and years and years and years and not be in a good position, because you actually have a perspective and perception. And I understand it. I understand your perspective. The more knowledge, that means the more certain you might become. But the reality is, how's it worked out for you? How much knowledge do you have right now and how much more competent do you feel? You probably felt exactly the same because you didn't work on your mindset. Where we are heading, you've probably heard about the virtual trading floor and all these things that we're going. The unique part about what we do with our in-house fund, which you're not going to get anywhere else, is this. If you scale up your account, right, and all the power to you, if you're smashing it and doing well, stay focused and crack on with it. Don't even get distracted by this, right? If you're doing well, carry on. But if deep down, you know that you're not certain and you don't know what you're doing and there are things in there, or you gave it a go once, dabbled with it and you didn't give it your all and you want to give it another opportunity, fine, I understand. We've all been there. However, the unique part about this, if you scale up to 300k, 400k and you lose it, you go back to square one, right? Right or wrong, you go back to square one. You go back to square one because what do they owe you exactly? You're just a number on the screen. And that is the reality. It's really good. It's a great stepping stone, but you eventually want to have your own capital. You don't want to just be leveraged by, you don't want to have this title where I'm just a funded trader. What does that actually mean? You're just a funded trader. If you just hit the wrong sequence of losses or trades, you're out of the game, right? And this is happening to a lot of people, by the way, right? Because they're becoming unstuck. They've gone through the euphoric state. They're overconfident. The market humbles them and they're back to square one with no confidence on the floor. And they don't have the support network. With our in-house fund, and we've had that, and for confidentiality reasons, I won't mention their name. However, they lost their account. They got through to the next stage, lost their account. It wasn't a bad trader. It was just not a good sequence of loss, not a good sequence of trades. They hit the limit and they got unfunded. It happens. But because we know them as an individual, we can see this person is actually very competent, very skilled, incredible mindset, and these trades are actually all right. But the reality is it just didn't work out, conditions or whatever, we reinstated their account. Why? Because we know them and we have an invested interest in them doing well. How much value is attached to that? Imagine you scale up to 400K and you've upgraded your apartment. You now have a nice car that you didn't have before, and now you have it. You're spending more, you've increased your lifestyle, you quit your job, boom, hit your limit, gone. You don't have that account anymore. You might say, well, I'll just back myself to do it again. Okay, well, let me know how stressful that is when you have to think about you've now increased your bills by 2 or 3 grand a month. It's a very different ball game where we can reinstate because we know you as an individual. It's a different element of risk. You know, that's their model. That's what they're doing. That's not what we're doing. We're looking to scale up so we can have those traders on the virtual trading floor. It is a completely different ball game and a level that we are playing at. That you need that backing, because if push comes to shove, they're not going to save you. They're not going to have your back, and that is going to be the situation that you're in. Now we're going to talk about the recession and what's been hitting. I've been explaining these videos. What do you think is going to happen then? You cannot afford to do nothing about it. And let me tell you a little secret. Deep down right now, and you might not even be thinking it, but whoever you're with, right, your partner, your family, they're looking to you for leadership. They're looking for you to leadership. And whether they tell you or not, they are looking for you to step up. They know what's happening. They've seen the prices going up and down, energy prices, petrol prices, you name it. It keeps increasing. They are expecting you on an unconscious level. They may not say it to you, but they expect it of you. Now, you can save and be in this victim mindset. How much are you going to save exactly? You can save 20%, 30%, 40%. You can save even 50%, and it still won't be enough. That is the reality. Now, it may be enough to survive and get through, but it won't be enough to thrive. When all these opportunities come and you sit there and go, if I would have worked hard and I scaled up, I could have been in a position where I was making 10, 20, 15K a month. I could now invest into these opportunities. I don't get any gain out of it. If I present you with a stock to invest in, it's not going to make a difference whether you invest in it or not. Yet I'm going to be sharing everything. And I've been through this, by the way. I know what it's like, and I've seen things recover slowly and I've seen things recover quickly. And it's going to be speed and access to capital what is going to get you there. So what is our focus right now? Our focus is this: helping you scale up as quickly as possible so you're making more money. Having that disposable income to be able to invest into rock bottom prices to level up. Whether it be stocks, crypto, property, and a few other unique projects as well, you want to put yourself in a position to take advantage of that. And if you're not, you're going to see the average person make hundreds of thousands, if not millions, in the right opportunities. Now, you may not turn $1,000 into $1 million. No, that may not happen. However, when you've got more money to play with, that starts to happen. I'm going to be investing in them. I'm going to be getting involved in them. I'm going to be sharing every single opportunity with the community, and those are going to get involved in it as well. And it's as simple as that. You cannot afford to take the risk to not be involved in that. And you have every resource here. If this energy resonates with you, then feel free to, we'll welcome you with open arms if you have the right mindset. And if you don't have the right mindset, then just carry on doing what you're doing. We cannot afford for anyone to affect the group or affect the mentality of the community, because we're just going to carry on scaling up. But this is a very unique time in history of trading, and I owe it to you. I owe it to you to give you a sense of urgency just about your life in general. Get your house in order. It's not just going to be about the system that you learn. It's going to be about the network. It's going to be about the goals that you set, the people that back you, your mindset, things that you're actually passionate about, and having a plan. Do you have a plan? Do you have a game plan to execute on? Or are you still in this mindset where you think becoming a funded trader is the holy grail? If that is how far your mindset goes, you've already lost, because there's going to be so many things that happen around you that you've not planned or prepared for that you won't take advantage of. And it will be more painful to miss out by just not knowing. So right now, my focus is on collating all of that together. I actually have a webinar coming up, a workshop that is going to instate everything. So you will know the whole philosophy, how to deal with it, which I can't wait for. That's literally in a few weeks. So as of right now, our focus is on the refinement, as you can imagine, in the AFT section. I'm so pumped for it. I hope you all have an incredible weekend, an incredible day, wherever you are in the world, and that you took some valuable lessons away from this content. And hopefully it's given you a bit of a wake-up call. Now is the time to step up. You owe it to your future self to make it happen.